Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, happy to be back.
John, a year ago, you declared that Manorama Gold Corp had made a big silver discovery at its Alamo project in Mexico. Recently, a pair of respected newsletter writers kicked that stock right out of their recommended portfolio to make room for a new pick. Was this discovery just a flash in the pan?
Well, Jim, Manorama's discovery is not a flash in the pan, but it has not evolved the way you usually expect a discovery play to unfold when you get an intersection that says, hey, we have something big. Now, the background for this story is that this is an old mining district in Mexico that operated from 1860 until 1930 from mainly the La Cantera vein, which is basically three segments, very high grade, over 1,000 gram per ton gold, 200 million ounces of silver, high grades. 200 million ounces of silver were hauled out of this vein in this district. Now, there were other veins that the old timers found walking around, and you can see a few little holes, pits, prospector pits dug into it, but none of these other veins had anything mineralization comparable to La Cantera vein. And the ownership was fragmented for many, many years. The project had never been drilled because of this fragmentation. And the Mexican group decided that we should try and consolidate this district, and they actually spent 6 years assembling all these small claims and optioned it to Manorama in 2017. Now, the key people at Manorama are Stephen Maynard, the exploration VP, and Peter McGaw, whose Mag Silver, of course, is his big success story. This became their baby. And Peter McGaw and Stephen developed what they call the piano key hypothesis so that lay people such as myself can better understand what they thought was really going on here. When they looked at the geology, they suspected that there are a series of faults, block faults that run parallel to that main vein, which have down-dropped segments or up-thrown the one that hosts the La Cantera vein. And in the Larry Buchanan model for low sulfidation epithermal systems, which has only been around since 1981, there is a specific 300 to 400 meter vertical horizon, the boiling zone, where all the gold and silver drop out and form these rich portions of the vein. And they said, what if these other veins that are parallel to this main one are simply the upper levels where there isn't any meaningful silver mineralization left because it has all dropped out deeper. And because the old-timers did not have drills, all they did was go look at surface, and if there wasn't anything on surface, well, never mind, we'll just stick to mining the ones where it happened to be thrown up, where the erosion had taken away the barren top and exposed the high grade. And so they designed a drill program, a 5,000 meter drill program back in 2017, got the permits together, and in November of 2017, the first intersections that were drilled through the Quintera vein confirmed that, yes, indeed, there are these other veins, some of them blind, that have been downdropped, that they are what's exposed to surface is actually higher up in the system than what is exposed in the La Cantera vein itself. But the big breakthrough came in January of last year when they had a very high-grade intersection in hole 17-7 that was 8 meters of 1,760 grams silver in the Europa Guadalupe vein, which was off to the west and basically a barren nothingness at surface. And that confirmed to them not just that these blocks were down-dropped to the west of the Quintera vein, but that silver enrichment is present at depth. So, of course, the old-timers could never find this because what's at surface is higher up in the Bonanza vein system. And the idea now is, okay, now we need to start drilling this off. But the company decided that this is such a big discovery that rather than just raise a bunch of money and put drills onto this and start tracking the high-grade mineralization and gradually stitching together a resource, they said, if this is as big as we think it is, we better make sure that all these underlying agreements have all their T's crossed and I dotted. So they went through everything and cleaned up any messiness that the lawyers may have left unfinished. And they also decided we need a much bigger land package because this obviously is going to apply to a larger area because where the La Cantera vein happened to have been popped up and eroded and exposed, that was just a coincidence, and it doesn't mean that the surrounding area is sterile simply because nobody found anything. So they have since then expanded the land position from just under 5,000 hectares to 16,000 hectares. And when I look at the map and I look at the orientation of the veins, I say, well, why haven't you acquired this ground here to the southwest? I mean, isn't that the obvious ground? They said, well, that is true, but we are still working on a final, acquisition. So I suspect that they will, in the not too distant future, announce a much larger land package. And of course they haven't been in a hurry to go in there and start drilling in and getting all the underlying landowners excited and the price go through the roof and all kinds of other parties come in there and get in the way. So they dialed back the enthusiasm, and the stock was kind of a big, boring stock. This other pair of newsletter writers had helped the stock into the 50, 60 cent range and were fairly supportive. But it was taking forever. The other thing the company did was they went in there and started doing detailed mapping and prospecting, and they expanded the number of veins to about 14 or 15 distinct veins. And when you add them all up, the strike length, you get something like 24 kilometers of vein strike, all the parallel ones. And of course they know that there's some blind ones also in between that may also be important. But this cumulative strike of these parallel veins is important because the La Quintera vein, although overall it stretched for 7 kilometers, only 1.5 kilometers was really enriched. So you have this sort of vein-like sheet, and it runs maybe 2 meters wide and is generally not particularly interesting. But there are these chutes where sometimes it blows as wide as 20 meters, and that's where that 1,000 gram per ton plus silver was located and mined. And those enriched chutes represent only 1.5 kilometers of the overall strike. So if you sort of say there's 20% of the veins had this chute enrichment, and you argue, well, if whatever it was that drove the La Quintera vein, the whole area there, the block faulting, it's all post-mineral. All these other veins would have been subject to a similar fluid flow during that formation period. And if you take a wild guess and sort of say, okay, the 20% periodicity of chute development is going to be similar, you end up with a 400 meter vertical extent, all preserved because these other veins have been downdropped, so they haven't been eroded away. You can start dreaming about a billion ounce silver district still being present here, with 200 million found and mined over a 300 year period. But it's not going to be so easy to delineate all this because it's going to require a lot of drilling along each of these veins to find where are these chutes, put together a resource, develop a mining plan. So obviously Manorama doesn't want to become a producer. It wants to eventually be sold. So the other thing they did, in September they started another 5,000 meter drill program, And what they did is they took locations, strategic locations within the property, and, 1.5 kilometers away from each hole, spacing between each hole, and drilled these fairly shallow 30-degree angled holes that would have taken, intersected at maximum 400-meter vertical depth, but it was designed to track these veins, intersect as many parallel veins as possible, even find some that are blind and not visible at surface. They weren't really expecting to hit bonanza zone like they did with that hole 7 in January. I mean, if they did, they certainly haven't told us about it yet. But the whole plan was to map out all these veins and establish which ones have some sort of mineralization in them, give them an idea of where within that vertical system the boiling zone is likely to exist, and set the stage for a future focused drilling program where they are targeting the right depth for each of the vein, where you would see the boiling zone, the bonanza zone enrichment, and go to town drilling this. Now, they have not released the results of this program that began in September, and these holes were painfully slow because of the low angle, taking as much as 3 to 4 weeks per hole. They're not designed to produce a bunch of high-grade intersections where the market can sit there and do the basic arithmetic and say, okay, we're seeing 300,000 tons of 1,000-gram silver evolve here and there. They have not given that to the market. So the stock has been a bit of a bore. But I think this is going to change. They're going to report on the results of this program. If they got lucky, there might be some flash in there. Maybe they're going to announce that they have an additional land position, in which case I suspect they may do another similar shallow angle program to map the area of the additional ground, so that they have a complete big picture of what is the upside limit for this. And then probably in the second half of this year, that's when they will get serious about drilling off these veins to find these high-grade shoots and start putting together at least the back of the napkin resource estimates, so that silver producers can take a look at this and say, okay, what are we willing to pay when to take out this project? Now, it's not cheap. There's over 300 million shares fully diluted. It's trading at 45 cents or so. So the project already has a $150 million valuation, which is pretty good considering that there is no resource estimate. We are in what's called the S-curve portion, and but when you look at the context, the confirmation of the piano key hypothesis, you can see that, yes, this is an unfolding discovery. They took a breather to make sure that they don't lose parts of it. They also took care of all the social license issues, got the 2 ejidos that are in that area on site so that they don't suddenly get upset because there's drill crews running all around. So I think it is not a flash in the pan. I think it is a very important emerging discovery, but we may not be able to fully appreciate that until the second half of the year, when they get down to delineating this with a large drill program.
We'll have more with John Kaiser right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with John Kaiser. John, a year ago you were excited about Eagle Plains and its Fisher Gold project, which the company spun out as its Taiga Gold Corp. Both companies are now limping along at a dime. Did farm-in partner SSR Mining not catch any goldfish at Fisher?
I would be very surprised if SSR Mining did intersect a significant gold zone on the Fisher shear structure, which runs to the southeast of their Santoy mine, which they acquired along with the CB mine when they took over Claude Resources a few years back. Eagle Plains had acquired this land position when it had lapsed, and the driving force behind it was Wayne Fisher, who passed away in 2015. And this shear structure has the potential to host similar orogenic high-grade gold vein deposits as in the Santoy mine. And SSR did a deal whereby it can earn 60% by spending $4 million, and then it has 90 days to give Taiga Gold, which at the time was Eagle Plains, $3 million to own 80%. Now, in 2017, they did a lot of mapping work, and that was not very, very interesting, didn't really generate any results. In early 2018, Eagle Plains decided to spin out Taiga on a 1-for-2 basis, and at the time there was a fair bit of excitement when I started talking about it on Discovery Watch, because 2018 was the year that SSR was going to start drilling. And indeed, they did start a 14,000-meter drill program for which results have not yet been reported. And it turns out that what they did was they really did something almost similar to what Manorama Gold did last year for its Alamos project. SSR said, we need to understand this 10, 15 kilometers of shear structure. We need to see where the structures actually are. And, as I contemplated this, it reminded me a lot of my experience with fly fishing on the Bow River. The Bow is a world-class trout river, and there's a whole community of guides that have evolved around it. And amateurs like myself can hire one of these guides, and they will float a boat upriver and then float down, and they will steer you towards all the so-called structures where trout hang out. And you sit there in the boat and you cast your fly everywhere where they pointed out. And eventually I learned how to spot these things even before the guide did. And all the guide had to do was steer the boat down the river, slow it down, allow us to float our fly past the places where the trout hang out. And I became fascinated with this whole process because it's very similar to what companies such as SSR are doing with things like the shear structure. Gold drops out in these systems in very special places, just like trout hang out in the riffles and the eddies, all these special places where the insects pile up. And this is what SSR has been doing the whole year. Supposedly they are going to give Taiga a report that outlines everything that accomplished, but I doubt that there is anything exciting in that report, because all they've done is build geological context. Now, they had a similar deal with SK Mining Corp over a couple years, and they managed to spend almost $8 million on the SK project, the SIB portion, trying to see if there was something similar to the SK Creek mine hidden underneath the thrust faults, and eventually they gave up. They gave up late last year, handed it back. SK Mining now has 80% back again. But in the case of the Fisher project, they have not given up. Whatever it is they found, they have the structures now in place. And in January, they started an 8,000-meter drill program, which is the equivalent of, okay, now we are getting out there with our fly casting rods and we are going to nail these trout. So it's not the case that they didn't catch anything in 2018 with that 14,000 meters of drilling, because they were simply building the geological context, just like those river guides in the Calgary area who have themselves floated down the river and studied all the structures so that when they have the paying customers in their boat, they know exactly where to go to and maximize the chance that these customers will end up catching a trout. So I think the next couple months are very important for SSR and Tiger Gold. If they come up completely empty, they may think again about paying $3 million to Tiger Gold to own 80%. They may already have spent $4 million, but are deferring that decision point because this 8,000 meter program is critical to them coming up with the justification for going on. Now, for Tiger Gold, it was spun out because Eagle Plains management figures that we need to make it easy for SSR to acquire the remainder. Now, if SSR goes to 80%, it hands $3 million to Tiger Gold, and then SSR proposes a $10 million program that would cost Tiger Gold about $2 million. And so it will have the money to stay in the game, and if that extra $10 million of focused discovery delineation drilling builds it bigger, then SSR will have to pay more down the road. So there's going to be a window coming up probably in the late second quarter where SSR will have to make a decision. And there's one other project that is not really talked about much by Tiger Gold. It's called the Leland. It's to the southwest of the CB mine. It's a 15-20 kilometer long stretch of claims covering what they call prospective geology. It's surrounded by SSR land, and you ask yourself, well, did Eagle Plains stake this land and then SSR scrambled and got everything around it? Well, no. The reason that there's not a lot of publicity about this, because it's probably a sore spot for SSR. These claims were held by another party, and SSR had surrounded it for strategic reasons, but these claims lapsed. And one of the strengths of Eagle Plains as a prospect generator is that they have a crack team that monitors all the claim situations in British Columbia and Saskatchewan. It does its homework as to what is interesting. And when these claims come open, it's like instantaneous, and it's online map staking, and they manage to fill in all those claims. They essentially beat SSR or whoever was their agent to the punch and snag this block of claims in the middle. Now, if SSR ends up saying, okay, we're going to play the long game, now you have 20%, here's $3 million, yeah, you can chip in, our news flow will really be the kind as it has been, like we're reporting last year's 14,000 meter program, maybe ahead of PDAC if you're lucky, and we're going to do the same, and you're going to have to write checks, and we'll dilute you to death. Well, with that money and with that go-ahead, a company like Tiger Gold Corp will be able to tackle the Leland project, which is 100% owned, and perhaps find something there where the market can shift the valuation away from the Fisher 20% net interest to a 100% owned project. So it's an interesting sort of a game theory problem that the SSR will have to think its way through. Does it risk Tiger Gold becoming much more expensive because it has been enabled by a $3 million payment that leaves them with only 20%? Or do we make a deal to take them out before they manage to get around to finding something substantial on the Leland project, which, of course, that's close enough to our mine operations that we would need to own that too.
We'll have more with John Kaiser right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're chatting with John Kaiser. John, back when we launched Discovery Watch in September 2016, one of the juniors you often talked about was Sirius Resources and its Cheechoo project. Whatever happened to that story?
Cheechoo caught my attention because of its location south of the medium-grade Eleanor gold mine that Goldcorp had brought into production at a cost of more than $1 billion. But since then, it has discovered that the domain model for the reserve was not quite right. There was more complexity at depth than could be seen from the drilling that had been done. Now, Eleanor was acquired in early 2006 when Goldcorp bought out Virginia Gold for stock, almost $16. $750 million worth of stock. And at that time, gold was still relatively cheap, $600. By the time Goldcorp completed its feasibility study, gold had hit $1,900 in 2011 and then crashed back to around $1,200. And at that level, the feasibility study was not particularly positive because the internal rate of return was only 3% and the net present value barely matched the proposed capex of over $1 billion. But since that was basically a strategic asset that was going to produce a lot of ounces, 300 to 400,000 ounces per year, and the gold price was bound to go up anyways because the U.S. Debt problem is not going to get any better. And at the time, of course, the evil socialists were running the country, and everybody was concerned about the U.S. dollar all going to hell and gold going to the moon. Now that there isn't an evil socialist running the country, nobody is particularly concerned about the debt that has hit $22 trillion and is set to keep marching up. But that's another story. Now, the investment was made. The mine went into production, and they discovered this problem that the reserve overstates the amount of gold there. So last week, the company, Goldcorp, dropped the bombshells of writing off $1.6 billion before tax loss benefits for the Eleanor project. It's in the process of merging with Newmont, and it also wrote down several other success stories from the past 15 years, buyouts that helped Bay Street an awful lot, but aren't going to likely happen in the next while, and enrich them until a lot more water is under the bridge. So they also wrote off $1.7 billion for the Penasquito project in Mexico, $683 million for Cerro Negro in Argentina, and $664 million for Red Lake. And you sort of scratch your head, Red Lake, isn't that like the greatest high-grade underground mine ever? Yes, but in late 2008, they paid $1.2 billion to acquire Gold Eagle and the Bruce Channel stuff. So I suspect that write-off is related to this. Now, doing this all before the merger is a strategic thing to do. Newmont takes these assets on with a lower cost base, and the timing is also good because now we appear to be back in a gold uptrend. Gold had a big move yesterday. It was a size 1345. It's pulled back a little bit now, but it seems to be on track for a sustainable uptrend that ultimately, who knows, could take it to $2,000. If inflation becomes part of the reason for gold going higher, and at the moment there's no evidence that this is the case, that is a good thing for projects such as Eleanor, which have been written off. And the reason is that if inflation is driving the price of gold up, it's also driving the operating costs up. But if there's a profitable margin in place, the total amount of profit actually increases as a result of the inflation. And since capital costs have already been spent and written off, they no longer matter. Now, this is good for all these producers that have good mines. All of these mines that were just written off are very profitable mines. They just haven't proved as profitable as assumed when the initial investment decisions were made to acquire and develop these projects. But for juniors, you need a higher real gold price trend. And I think that type of real gold price trend is underway, because it isn't about fiat currency debasement or anything like that right now that's driving gold. It's the sense that the United States is abdicating its leadership role in the world and unleashing enormous instability that creates a lot of uncertainty about the future, and that gold ownership is one thing that across the political spectrum makes a lot of sense. So we're seeing gold start trending higher. And we could see $2,000 in real terms, which is like only maybe a 40%, 50% gain from the current level. But it has enormous implications for projects such as the Cheechoo project. So Cheechoo, when Dominique Doucette first introduced it to me in 2014, he argued that this is a bulk tonnage type system. It's a tonalite. It's an intrusion. It's got disseminated gold mineralization all over it. I think I can demonstrate that this is one of those 0.6, 0.7 gram per ton deposits, a couple 100 million tons, and it can be open pit mined. But between 2014 and 2016, gold managed to go as low as 1050. So that whole story kind of fizzled. The company ended up with 100% of the project after it bought out Golden Valley, which retained a royalty. But it was in early 2016 that the geologists started to think, we keep hitting these high-grade snippets within this general envelope of low-grade gold mineralization. What is this all about? And they came up with the realization that they had been drilling it always from a sort of north-south or northeast to southwest angle to go through the meta-sediment contact and the tonalite body. And they said, well, what if there are structures that kind of run east-west? Well, we're drilling subparallel to them, so we're only going to nick these things, and it's not going to be easy to repeat it. So they turned the drills around in 2016 and started drilling more in the sort of a southeast to northwest direction, so that it would be perpendicular with the assumed structures of gold enrichment. And they did start getting better grades. And in 2016, gold ran almost to $1,400. So everybody got excited. Goldcorp made a 19.9% investment. The Osisko boys also made an investment, though they seem to have disappeared. And since then, Sirius has spent $15 million on this project. But in 2017, it started to become apparent that even with that, they were not putting together an underground resource that hung together. And so interest in the whole play fizzled. Azimut Goldcorp and East Main did work on their project to the south, what they call Eleanor South, and this the whole project kind of fell off everybody's radar. But when I talked to Dominique set at the Explore conference in Montreal, I realized, he explained to me, we have given up on trying to delineate an underground resource. We're back to our bulk tonnage model. We now have a better understanding of what the proper domain model is going to be. We're going to use a 0.3 gram per ton cutoff. We're thinking of capping the high-grade gold at 115 gram per ton gold. And we hope in the second quarter of 2019 to have an initial resource estimate. And the stock bottomed at 13 cents in December from tax loss selling and has since almost doubled as first we're into the new year. But as the market starts to realize that this is going to turn into an optionality play. So the two things going for the Cheechoo project right now is, one, it's back to the bulk tonnage model with a resource estimate by the second half of this year, and gold is in an uptrend which could drag an asset like this into the money. And because it is fairly close to the Eleanor complex, if they end up coming up with a 200 million ton blob of 0.7 gram per ton gold, that's about 4 million ounces in the ground. It's $30 rock at $1,300 gold. It's not super spectacular. It's unclear how profitable it will be, but its location is such that once Newmont's absorbed Goldcorp, it may have to think, we have created this enormous infrastructure development in this part of the James Bay region. Whatever that cost, well, it wasn't our problem. Everything is now with a blank slate. We may need to acquire serious and just inventory this project and maybe turn it into future mill feed for this strategic investment Goldcorp made 5-6 years ago in this remote region. So in a sense, the Cheechoo project has gone full circle to its roots. It's still a discovery worth watching. Goldcorp is still a significant shareholder at about 18% or so. And if we do see gold continue on a sustainable uptrend, we will see this project, this company disappear, maybe by early next year.
John, thanks for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.